Good afternoon, everybody, and welcome to SDWorks Payroll Question Time. My name is Natalie McDonnell. I'm Senior Events Manager at SDWorks, and I'm delighted once again to be introducing you to our speakers and going over the agenda for this month's Question Time, titled December Payroll Challenges and Preparing for 2021. A little bit of housekeeping before we get into the agenda. We have some questions which we selected in advance with a number of relevant questions suitable for the defined topics for this month. We are also very much welcoming questions during the session, so please do send them through via the question box, and I'll do my very best to pose them to the speakers either during or for time at Q&A at the end of the webinar. We have polls, as usual. We'll be running lots of polls to hear your thoughts and opinions. So please do take part. It really helps us to steer the conversation, and we like to get our panelists and experts to comment on their views and opinions as well. And slides and the recording will be shared online and directly to you by email as well, so you'll have access to that to catch up on anything that you might have missed or revisit, or of course share with your colleagues. So quick disclaimer from us, the presentation does not provide definitive answers to individual queries. Some places takes views on matters which are uncertain. It's not intended to be relied upon in any specific context or a substitute for seeking advice, legal or otherwise, on specific circumstance, as each case may be different. So without much further ado, here are our speakers. So thank you again for joining us, everybody. We have Simon Parsons, Director of UK Compliance Strategies at SDWorks. Hi, Simon. Lovely to see you.
Good to be with you. Well, yes, centre the lot. Yeah, I'm in my granddad cardigan just for this occasion.
Yeah, as you can see, all of we're embracing the Christmas spirit today. So I hope everyone watching is also joining us. And Lou, thank you for joining. So Lou Gray is Head of Operations and Transitions at EY Absolute.
Hi, everybody.
Samantha Mann, CIP from CIPP, Policy and Technical Research Lead at the CIPP. Hi, Sam.
Hi, everyone. Hi.
We have Kirsty Rogers, Partner of Employment DWF Law. So thanks for joining us, Kirsty.
Pleasure.
And Andy Nichols, Industry Liaison Manager from the Pensions Regulator.
Hi, everyone.
So our discussion topics for today are on screen. We'll be talking about job retention scheme. We're talking about preparing for December payroll, Christmas, what to expect, national minimum wage in 2021. We'll be touching on pensions, retirement, Brexit, off-payroll workers, what we need to plan for next year, and of course try and cover off some of the questions that you guys sent over today as well. So to start us off, we're going to run a poll. So I'll just pull this on the screen. You should be able to see it now. So just a sort of a temperature check, just to see how everyone's preparing for December payroll. So with the holiday season coming up, how would you be preparing for your December payroll? We have a few multiple choice answers there for you to select. So we start early in November. We're impacted by furlough, so we're not sure how to prepare. December's no different to any other month. We respond to client requests earlier for paydays, or we predict more client requests for earlier paydays, and so we prepare in advance. So I'm going to go to Lou to comment on the first poll, what you think the majority of people might answer. Lou.
I think that the majority of people will have started well before December in thinking about that month, especially as we're already dealing with furlough and all the preparation for that. To me, it will be you start in at least November. I know that in my team, we started in October, thinking that we would get ahead of the game, talking to clients, making them aware, going over December. And on the 30th of November, we had our plan in place, and two clients on the 30th of November said, oh no, we have a bonus run. We have to do that. And gradually, as the week has gone on, I think maybe I would say 20% of my clients in the first week of December have changed their mind. But at least if you prep and you're ready for it, at least that definitely gives you the way ahead. And as well as balancing the payroll, of course, you are dealing with the furlough and any other matters that you have to deal with.
Yeah.
So it'll be interesting to see what the poll says.
There we go. So 19% and starting early.
I'm laughing because December is no different to any other month, 52%. Part of me thinks, is that people maybe just taking the mick out of that question, or is that actual serious? Only because I've had to deal with that in the month of November when I was trying to talk to financial people about December, and they genuinely didn't know that there was any difference in December. So it would be interesting to know. That's actually quite an interesting statistic.
I think it also has a lot to do with, I mean, you're a bureau. I come from a bureau background, so I know that, we planned ahead for December. We knew that December was just going to be kind of, bar humbug, don't come near me with a Christmas tree because I don't care. It was all about payroll processing. But if you are working in-house and you have 1 or 2 payrolls to process it, then probably the challenge is not as significant as dealing with a payroll run of thousands. And I'm sure Simon has a similar kind of view on that.
Sure. Yeah, and I'm thinking that we're just discussing some of the finance transfer capabilities just as part of the business review. And reviewing with the BACS, because we're a registered BACS bureau, so an approved BACS bureau, thinking what do we do? And it's just realizing that certain times of year, there's usually 2 times of year, where we actually have to split the BACS processing requirement because BACS almost breaks. Am I allowed to say that? Maybe not, but there are some days where actually, if you left it to the normal cycle, it wouldn't all go through in time, and you get those. So it's usually around Christmas peak because everybody's decided to pay 2 weeks early or that sort of thing. So there's double payments, amounts of payments at the beginning of the month and nothing at the end. The other time is generally around Easter. So there are times where we actually have to physically plan to stagger the way the BACS production goes through to make sure BACS get it in time. Because if we left it to 9 o'clock when the BACS deadline is, not everything would go. So it's interesting.
Great, thanks. So we've got another poll before we start our discussion topic around the slide that you can see on screen now, job retention scheme, what the latest is. So the next poll we're going to run is going to come on screens now. We're asking, are you confident you can meet the new deadlines for the 14th? So the multiple choices, we're not furloughing, so it doesn't apply to us. Yes, it's no problem, or no, we're going to struggle. And I'm going to go to Sam for your comment here on what you think our audience, a majority might say.
Oh, it's always a big pressure question, this one. I think the third is going to probably get the majority. No, we're going to struggle, because I know from talking to members back in the summer that having a month in which to make a claim was proving to be quite tight. So, having a shorter period is going to be even tighter. But of course, we've got to recognise that for some payroll professionals, they've not had to deal with furlough at all this year. And so, they're in a very, I'm not going to say fortunate position, because I think when you work in payroll, you're never really fortunate, other than the fact that you're doing a job that you love, because there's always challenges. But I think, we have to recognise that for some payroll professionals, furlough hasn't been the challenge that it has been for others. So
yeah, here we go.
Oh wow! Well, there you go. I'm glad I mentioned both.
Cover all bases.
Yeah, absolutely, absolutely. And actually, that's encouraging, and that's actually really encouraging. That means we can be a little bit festive because we don't have to worry too much. Please forgive us. You know that we're using an F word other than furlough in this discussion. Festive, I mean, when I'm talking about F word.
Yeah, thanks, Sam.
So that's good. That's encouraging.
Sorry, Simon, did you want to say something?
I think we'll probably say as part of the discussion, Natalie, but I think that deadlines are proving to be difficult for some industry types, especially where variable hours is work.
Yeah. So we're going to go to our first question then on this slide. For Lou. So we thought the job retention scheme was finished and the closure of the government extended. So what is the latest we know on the progress of the former scheme?
I think we're going back to talk about the deadlines again. I think for furlough, the key is to remember your deadlines, and also always remember to keep everything, all your audit material, to show that if HMRC do knock on your door, that you have all the information to hand on the date that you actually made your claim. And I think that can be that's very much easier said than done sometimes, but it is key critical whenever you think of the initial 3, 4, 5 months around furlough, that the legislation was changing, sometimes daily, definitely weekly. But even if you look at the last couple of months, you know, on a Friday night, there have been minor tweaks, and that minor tweak can have an impact on what you are claiming from the government. And I think, you know, after the 30th of November, it was made clear that to submit any further claims for periods ending on or before the 31st of October couldn't happen, and that you couldn't add to your existing claims for on or before the 31st of October. And I think that's very important to remember. And also to keep a note of that records have to be retained for 6 years, because HMRC can come and ask for backup, can ask, you know, for the information that you hold, the records that you have, and use that to make decisions whenever they're auditing the work. I think that's very important. And also then from the 1st of December onwards, that employers cannot claim the furlough grant for any day when an employee is serving statutory or contractual notice. And I think there's so many things that you have to keep a note of. And I'm just back to remember to keep and retain and to save down all the information, and to keep a note of all the deadline dates. It's very easy for us to say the 14th of December is the deadline date for November, but then you remember then that in January you have another deadline date, and those deadline dates, whenever you are under pressure processing payroll, dealing with employee queries, especially now that maybe more businesses are shutting down, that you have to remember all the actions that you take, because they will have implications.
Absolutely.
Yeah. So I think it's quite difficult for some. We're having people come along to us, for example, there's some that said, oh yes, we've done all these furlough claims. There's this one individual now wants to go and do his claim, and they want to go back to March, and you're too late, you can't. So it's just remember, you need to meet the deadlines or you're too late. There is a slight concession with the December deadline if you have really extenuating circumstances, but they're pretty much saying you're out of time, you can't claim. So for lots of payrolls, the timing of work and time collection with payment won't match furlough claim times, which go from the 1st to the end of the month. So it's an idea. So you can't have a 16th of December payroll cutoff and expect to make your furlough claim on the 18th, because you need to have made it by the 14th.
We've just had a question quickly come in, actually. Joanne asked, what about for an employee who is on garden leave as they've resigned?
Well, I don't know what your thoughts are there, Kirsty, on garden leave, because they haven't left, but in effect, and this is probably part of the next session of what's the new basis of job retention scheme, and the next slide, we'll cover it a bit here, is if they're on notice of ending of their employment, you can't furlough them from the 1st of December.
Or you can't claim for furlough. They can be off, but you can't claim for the notice. So you can't claim for any of it. You can't use the furlough money.
So if you did, that's potential fraud, but you've still got your contractual obligations to the individual to pay them whatever's been agreed between the two parties, which could be a furlough amount of money, I suspect, if that's been what's agreed. But you can't notice beyond that. So I think notice has to really be full pay.
Mm-hmm. And what does the employer need to do now to make further adjustments, Sam?
Well, I think they need to be, considering, we know, and we've discussed in previous panels, the actions that HMRC was starting to take in terms of writing out to employers who their systems had identified were at risk of having made an error or a fraudulent claim, but let's kind of take it nicely. So HMRC sent out in the region of 30,000 nudge letters, which aimed to prompt employers to revisit their paperwork, revisit their records, revisit their claims and their claim calculations to ensure that they had complied with all of the rules and the eligibility criteria. Now, those letters went out over a period of weeks, and we are hearing now from members and from payroll professionals about the next phase of that. So where an employer has chosen, however wisely or unwisely, to ignore those nudge letters, HMRC are following up with further, compliance action by asking for more information, and quite a considerable amount of information, without actually saying what that information is. We have reason to dispute your claim. Please prove that your claim was right. And that, as I say, we know from talking to members, is proving to be a very time-consuming activity, going back over those calculations. As Lou said, those records need to be maintained for 6 years. And of course, all of these, any furlough payments that have been made need to have a written, when that could be an email or it could be a letter, but they need to have written evidence to show what that furlough agreement was between the employer and the employee. The employee doesn't have to have provided a written agreement to that, but they do need to, the employer does need to have provided a written information about that. And of course, we know that there might be mistakes because of overpayments, there might be mistakes because of underpayments. And depending on what they are and how long ago they might have been, will also then direct whether or not there could be a penalty situation arising in the future if HMRC find that you have overclaimed either fraudulently or deliberately, and you haven't taken steps to correct that claim.
And it's probably also worth saying, I'm seeing at the other end where people are being made redundant, them challenging their employers in relation to the payments they've got or the agreements in place, and suggesting that they might report them to HMRC, or indeed just going straight and reporting them, because if they're leaving anyway, they've got nothing to lose, and if they are disenfranchised, they may do that. So there could be a lot more inquiry along the lines that Sam's suggesting. Happy Christmas.
That's interesting times.
Thank you.
I'm very glad about that poll answer. That poll answer is encouraging me that we can be a little bit more festive.
So let's go on to what's changing with the job retention scheme. I'm going to go to Simon. What's different for furlough?
Yes, so some of these we've probably already mentioned a little bit, but the significant changes are your new deadlines. So now with every furlough month through to March next year, the deadline is the 14th of the month following. So it's very tight. There is some concession where that is a bank holiday or a weekend, that therefore the date is then the next working day. So if the 14th is a working day, that's the deadline. If it's a weekend or bank holiday, the next working day is the deadline. I think the latest it ever goes up to through to March is the 15th. So I don't think there's a lot of choice on those. And as Lou had mentioned, those on notice, termination or resignation. So it works both ways here. So if we've upset our employees and they decide to give in their notice, you can't claim furlough for them anymore. And so they're still subject to their rights of their contract. And so it applies to those for termination and resignation. That is new from the 1st of December. And the other policy that's come in is that actually HMRC will name employers who claim. They brought out a list of bandings, so there is a banding from £1. So if you claimed £1, you will be listed, but they do it on various levels. So they won't tell you how much an employer has claimed, but they will tell you which banding that employer is in, and that will be available publicly. But also they're indicating that the personal tax accounts for claims from 1st of December onwards will, I guess there's a question of eventually, because there's an element of what point that will be, because the claims can be over a 6-week period, will be informed of the amount that's being claimed in their name. And these are measures potentially to make sure that the employee and employer are aware that whatever they claim has to be paid. I don't know if others have got thoughts, but we've again see regular guidance updates. In fact, the guidance has been updated twice. So it was updated last Friday and on the 1st. So the guidance is being, and then prior to that was it the 19th or 23rd of November. So the guidance is being updated all the time. Fortunately, minor updates, but there's quite a lot going on.
Yeah, no, it's that T word is out again, isn't it? That use of the transparency word. So HMRC, have made clear in the information that they've put out to date in terms of naming that it's all about kind of transparency, being transparent both for the employer and for the employee, but also it's another step in the arsenal to fight fraud. And we know that whilst it will affect claims that are made from December, the latest update that I read was that the naming would begin in February. Am I right? Am I right? Or have I dreamt that? I have odd dreams these days.
I think I'd said that as well, Sam.
Yeah. So, so it's being aware of that, but we've yet to have the full detail of what's to go in there. But as Simon said, that there's a fair amount of information being published so far, particularly to reassure employers who might be at risk as a result of being named, that they can apply to be exempt from the naming process if they are at risk as a result of that. And further details of how they can make those applications are yet to be published. So it's important to keep an eye on the latest updates on gov.uk, because there are a lot of them.
Great, thank you. Let's go to our next slide. So equality matters. This is a big special topic at the moment since the pandemic. And Kirsty, I know that you have quite a bit to say on this as well. So a few questions for you. What do you see are the sort of main trends at the moment, the impact on equality? Are there main areas of challenge? And what do you think future changes are that it requires employers to prepare?
So I think there's no doubt that diversity and inclusion is going to take centre stage when employers are beginning to think about redesigning their business, post-COVID, and they're going to have the chance to be the organisations that they aspire to be. There is an opportunity here, but it's going to take quite a lot of careful thought, because the virus presents a greater risk to individuals who are not only clinically vulnerable, including pregnant women and older women, but there is also quite a disparate impact on those with from certain ethnicities, and that's really only become much clearer over a period of time. And if you look at the information that we've got, the World Health Organization's identified that those aged over 60 or who've got cardiovascular disease or respiratory disease and autoimmune are at a higher risk, as are pregnant people, and that gender plays a role in risk, with men being at a higher risk of death from COVID, and that in particular around ethnic minorities, the opportunities of risk are far higher. So the Public Health England documents show that people of Bangladeshi ethnicity have got twice the risk of death from COVID than people of white British ethnicity, and people of Chinese, Indian, Pakistani, Asian, Caribbean and other black ethnicity have between 10 and 50% higher risk of death compared to white British people. And that's going to impact on people's desire to come back, albeit that once we have a vaccine that'll be easier, and the risk assessments that are required. So there's ACAS guidance now in place that states that an employer should listen to any concerns that staff have, and if they are genuine, they've got to try and resolve them to protect the health and safety of their staff. So offering flexible working, offering the employee the chance to take holiday or unpaid leave, and it might be appropriate to suggest a medical report, but again, subject to people's ability to get that. So we're already starting to see claims of discrimination, indirect discrimination, where people are required to go back to work or they think that their health is more at risk. And then there are obligations around reasonable adjustments, both for people who are in the vulnerable category under the guidance from the government, but also under the Equality Act for those people who are disabled. And that there will be challenges for employers in trying to make all those adjustments, which may not be possible. So there's also differences between the Welsh government guidance, the Scottish government guidance, and the English government guidance on what a risk assessment should look like. So the Welsh workplace guidance says you've got to take extra care to safeguard vulnerable employees and identifies the disproportionate impact of COVID-19 on Welsh people from BAME backgrounds. So they really call it out. And the Scottish government have also got a different risk assessment tool, which has been published in the light of the mounting evidence around ethnicity and death. So I would see that all of that is going to come to the fore much more as people are asked to return to work and asked to take more risks effectively until the virus, until we've got proper vaccinations, and until we know what people's health and safety, how it's going to be impacted. So we are already seeing claims as well of bullying and harassment, where people are perceived to be more likely to pass on the virus. So although people are more likely to become sicker as a result of maybe ethnicity or gender or anything like that, the public at large are almost making a connection between, and you're more likely to catch it from them, which that evidence isn't there, but then they're making inappropriate comments, and we're seeing more claims around that. So the conduct of your workforce, which also is the responsibility of the employer, is really, really important, and making sure people are treated properly and fairly is of paramount importance, not least because a lot of people are very anxious about having to come into work, even if they don't have any of it, even if they're not in these categories. But if they're in these categories, it's heightened. And then we're also seeing questions around the use of PPE and ethnicity and diversity. For example, if you've got a beard and that's part of your religion, and your face mask won't fit if you have that beard on. What do you do about that? So we're seeing more questions around the wearing of PPE in these environments and the impact that that may have on people from different ethnic or religious backgrounds, and the adjustments and the changes that you can make as an employer in relation to that. I think what is absolutely critical is that there is a full risk assessment done for each person, and that you don't have blank risk assessments, especially where people have raised concerns. And I think a lot of people don't realise that there is help around where you need to make adjustments in the form of the Access to Work scheme, and they have also extended the timescales to make a claim for costs from 6 to 9 months over the pandemic. So just saying, oh, we can't afford to make those adjustments on isn't going to work. You've got to look into the help that you can get, and that help has also been extended. So quite a lot to think about there. I'm aware not all of it's payroll, but some of it is certainly linked to pay, especially around, do people take holiday instead of returning straight away? Do you get people to work from home? What's the cost of those reasonable adjustments? And how do you treat people generally if they can't return and they can't work from home? What pay do you give them, or are they entitled to be suspended on full pay on health and safety grounds? So all of those things are fairly challenging. Shall I stop?
That's a lot. Consider. I wonder if everyone had all those things in mind or consideration. That
well, I think what Kirsty's pointed out there is quite important. Sometimes people feel they're on their own and have to cope with this, and they can't afford to. There are actually government schemes to help you and pay for it and cover it. So there's an element of be aware of what they are. But we can have a tendency during these sorts of crises to go back into sort of instinctive reaction without thinking what that means. So families are struggling with childcare or other responsibilities, elder care, etc. So what adoptions we can make. Another angle that I think we put on the discussion point actually was the gender pay gap and implications, because the gender pay gap was, well, actually the deadline was removed for this year, but that reporting was for the 5th of April 2019. There's still an obligation to do the snapshot reporting on the 5th of April 2020. That's when everybody was being furloughed. And I don't know, Sam, are you aware of any of the detail there on that? I know the CIPP published an article on it from the Government Equality.
Yes, we did. We'd written to the Government Equalities Office back in the summer to inquire as to whether or not there would be a similar kind of postponement of the mandatory deadline for reporting for this year, because this year actually probably was potentially going to have more impact. The response we got kind of made clear about calculating gender pay gap. So whilst the answer wasn't no, we're not going to postpone the deadline again, or the reporting deadline as we did earlier this year, there was clarification really in terms of including furloughed employees within your headcount, and where a furloughed employee had received reduced pay, that they wouldn't be counted as a full pay relevant employees. However, where their pay had been topped up, there would be. So there was a fair chunk of guidance provided by the Government Equalities Office on calculating the gender pay gap, but the implied message there seemed to be, it's business as usual. And what will be interesting to see is how that impacts on employers' results. Particularly those who will have set strategies to reduce their gender pay gap over a number of years, and obviously those strategies would have been set without any thought of furlough and pandemics in mind. So it will be interesting to see how that impacts, and indeed how government react to those changes in results. So they were certainly kind of the thoughts that I was having. That doesn't mean that I'm not going to still go back and ask that question, because I'm not convinced that we totally got an answer. And I think the impact of the furlough, notwithstanding the poll responses that we've had today, the impact of the coronavirus job retention scheme and furlough will inevitably impact on gender pay gap results this year and next year indeed. So which of course, as we know, it falls within the review period that was going to be carried out to see how gender pay gap reporting would continue to roll out to smaller employers. So, you know, I think there's quite a discussion there in terms of, you know, how that has yet to be impacted.
I think it'll be interesting to see if people realise that employees who are on furlough but got a top up should be included, because I think that's quite confusing. And it says if employees have their salaries topped up to their normal levels, what does that mean? If they get commission and bonus and things like that, which they won't have got during furlough, are they included or are they not? I think it's going to be difficult to calculate.
It is, you're absolutely right. And again, it's the devil's in the detail, and it is always that level of detail that kind of captures people. So whilst it was good to receive this information, it didn't answer the question. Not really. It kind of implied an answer, but didn't actually answer. And also it posed a number of other questions that really we need to kind of drill down and get the answers to.
Yeah. Well, with my cynical hat, and some of you will know that I have it a little bit with my sort of humour, there could be some companies that number-wise are significant, so they have to report their gender pay gap, but actually inclusion of individuals, they will have total equality because there will actually be no one to report because everyone was on furlough.
So
well,
everybody,
because there'll be no full pay employees in the business at all. Therefore, sometimes in the past, I've seen 0,000 figures on gaps and everything's wonderful. I tend to think, actually, I wonder if the maths has been done right, because that's almost impossible. But this year, you probably could genuinely have zeros across the gaps because there is no one being reported. They're all excluded.
Potentially, yes. Yeah, I think it's going to be interesting for the people who are responsible for writing the reports. And whilst the reports aren't a statutory requirement, they are by far, I think, you know, they are their business's opportunity to explain their results, explain their thinking, explain their, you know, kind of their policy and their kind of forward-looking strategy in this space. So it'll be interesting to see kind of what those stories say this year and what the narration is. I know that's not directly a payroll thing, but we know from talking to members when gender pay gap reporting first came out that there's, you know, a great deal of cross-working between payroll and HR to ensure that this information is accurate and that the narrative accurately reflects, you know, the company's ethos.
Okay, let's go to the next discussion topic, Christmas. Hey, let's start off with a poll. We have a poll for everybody to take part in around Christmas and how you will be thanked by your employer. How will your employer say thank you to you this Christmas? So it'll just be quite interesting to see what everybody's results are here. Is it usually a gift, hamper, vouchers? Are you someone lucky enough to have a Christmas party, albeit a virtual one, bonus or nothing? So I'm just going to keep that open for a little bit. I think we just had 58% people vote. And then I'm going to ask Kirsty to comment on this poll. So let me. I'm going to close that.
I would say that I think most people will get something like Christmas vouchers. I think if the organisation's of any size, it's really difficult to manage anything at the moment because of the difficulties with meeting up and the difficulties with even providing something in the post, and all the other difficulties that there are about, well, what do you give somebody in a hamper these days? But oh, not so many. Christmas gift or hamper. Look at you. Yeah.
Yeah, it's more the admin involved in getting people's personal home addresses and making sure they're happy with it and sending things is the challenge.
Yeah.
Sadly though, 26% they won't and they never do. So
That's not very good, is it?
Yeah, let's hope that changes.
I got the lowest mark, gift vouchers, but that's what we did.
Oh dear. I mean, it worked. We've run these quick polls before with our membership over the years, and that whole kind of bar humbug, no, we never get any thanks, we never get a gift or anything, is surprisingly high. One day we will do some more research to try and drill down exactly whether or not there are sectoral differences as to that might dictate that. But it is, Scrooge is alive and well in the world of employment.
Yeah.
But you'll maybe find
I think
that
there are other festivals as well. I think we have to be careful. It's just not just about Christmas. So it's more about festivities these days. So there are always concerns raised that you're not excluding people by making it too much about Christmas. But it's still seems to be, from what I hear, something that employees appreciate.
Absolutely. Okay, so back to the slide then. Lou, I have a question for you around HMRC and the relaxations that they have for various holiday seasons, including Christmas. So my question is, what are they and what does it mean?
I think one of the things has been that employees since lockdown and COVID may have had to purchase office equipment to enable them to work from home. And the HMRC have temporarily relaxed the rules where the employer reimburses the cost. And that had never happened before. That was always going to be a taxable benefit. Also, what HMRC have done is that they have changed the system when it comes to an employee setting up their own digital account, and they can claim for the £6 per week, which they can do via their own personal account. HMRC have made that so much simpler, especially from October, that when an employee logs in and makes this claim, it actually is set up that it goes right back to the 23rd of March, which was the lockdown date, and that £6 a week can be reclaimed and actually can be automatically reclaimed for the whole year, not just in part. And it is also the tax digital means that that is reflected on your personal account literally within days. In fact, to be honest with you, I think mine reflected it within 24 hours. But I think what we need to reiterate to employees or individuals who do this is that you're not going to end up with a check landing on your doorstep, that it will actually be reflected in your tax code, and then your employer will get it in their next download whenever they're going on to HMRC to get the personal taxes. And I think those are all very useful for the employee and very simple as well. And what I've noticed more and more as we have gone through the months of being in lockdown is employers looking for alternatives as well for additional payments to make to their employees to cover the costs from working from home and to giving them the benefits. So that has all been actioned really quite quickly by HMRC. When you look how slowly they do move, in the past for lockdown, there have been certain areas where they have really sped up their whole process and made it user friendly, not just for the employers, but for the employees to be able to have quick access to the information.
Thanks, Lou. And actually going back to sorry, Simon, were you about to comment?
Yes, one of the concerns, Sam and I are on a few government at HMRC, and one of the, I'm trying to remember who it was, was it Chartered Institute of Taxation brought up how HMRC would react if, because one of the concessions that we have as employers is to provide an annual event and can be tax-free up to a certain amount per head. So it's not even per employee. So if a couple went along, a worker and their spouse or partner, the allowance would be for the partner, even though they don't work for that employer. And the question was, that's not possible this year. What can we do instead? And would it have the same tax concession? The initial response was no, it would be taxable. But we're pleased to say that it was about 2.5 weeks ago that HMRC have actually come out and confirmed that actually if you do a virtual equivalent event, that it will be tax-free up to the same limits as if you actually held an event in relation to the current pandemic we're going through. So virtual Christmas parties are a concession that we can have. And I'm trying to remember what the limits were because it's escaped my head. Is it £150 a head?
It is £150 a head. And what we were seeking from HMRC really was in advance was confirmation that Section 264 of ITPA, the Income Tax, Employment and Pensions Act 2003, which is the section that deals with annual parties and events, could also be used to cover virtual events. Because whilst there was nothing in either the guidance or the legislation that suggested that annual events have to be face-to-face, there was equally nothing that future-proofed it to say in the future these could be held, electronically, virtually. And so I think particularly the tax profession wanted clarity on this point before entering into the festive season, and employers then ultimately a few years down the line finding themselves at odds with HMRC over the definition of Section 264. And I think that's what we were trying to find. And yes, as Simon said, at first there was a bit of a bar humbug approach to this, but we were pleased that HMRC saw the wisdom in accepting that Section 264 could indeed cover electronic events. We've seen a whole host of very imaginative virtual events this year. Conferences have made use of, I'm going to say wine tasting events. I know Simon doesn't drink. One day these wine tasting events will also be expanded to include non-alcoholic options as well. But I know I've attended events where you normally have an after dinner speaker and you'd be sat in a room in your posh outfit, listening to an after dinner speaker and eating a meal and drinking coffee and having chocolates, etc. Well, the event I went to, I kind of got a little hamper and there was a bottle of dessert wine and some crackers and cheese, which was really nice. That was a real treat. So there are ways in which you can sort of have these, and it'll be interesting post festive season, and I'll say festive season rather than Christmas, to actually hear from employers, and maybe this is a question for January, as to how many actually took advantage of the fact that a virtual event rather than a face-to-face Christmas party could be held, and indeed what they might have chosen to do. And yes, that £150, it's not an annual allowance, it's that £150 is there. If you exceed that based on your head count, then the whole amount is taxable. But the critical factor is that it's an annual event, which might be at Christmas time, but it might be also equally in the summer. It might be an annual barbecue. But if it's a one-off event, that wouldn't necessarily be captured by this. And it's all costs that are associated with hosting that event are included, which includes VAT. If you were holding a face-to-face event and you had accommodation for some people who had to travel, it would also include those sort of costs as well. So, it's worth taking a look at HMRC's guidance if you haven't already done so. It has been updated to take account of a virtual event. I'd like to know what you get in a £100 hamper, because I don't think I've ever seen a £100 hamper. So I wouldn't mind knowing. So answers on a postcard, please. But yes. And of course, we've always got, you know, the trivial benefits amount that we can take account of, which is £50, so long as it's not cash, so long as it's not given in reward for a specific contractual or contractual entitlement. It's, you know, specifically to say thank you, to say happy birthday, happy Christmas, congratulations on the birth of your child. You know, it's and it's not given in the form of a salary sacrifice. So you know, those are also available to employers who want to take advantage of those, which let's have a look. 31% potentially do.
Yes. But,
thank you.
take some care, because there are elements of, if you think the £150 we can't do the party this year, we'll give it to you as a cash bonus, is fully taxable and deniable. The employer will pay its share of the national insurance as well, be subject to the apprenticeship levy. So be careful it's not cash. Also, there are some limitations on vouchers. So the trivial benefits amount is £50. If you gave £150 worth of vouchers, I'm suggesting that would be subject to Class 1 national insurance and reportable on P11D for taxation purposes. So you have to make sure you're within the limits allowed for the options that you're looking at. But sometimes there's an element of, we can think, well, it would have cost us £3,000 as an employer to put an activity on for 20 people. Let's just share it out. If you do, it might cost you more than the £3,000 because you've got national insurance and apprenticeship levy to pay. So it's all fun.
Yeah, yes, there's lots of different options, but the potential tax implications vary enormously depending on which one you go with. Cash, I always think is easier, but the results are going to differ depending on what the tax rate is of the employee, and it will be, you know, will be costly. But I think there's a simplicity to cash going through the payroll that you don't necessarily always get with trivial benefits in an annual event. But so. You can tell
we have seen this sort of pragmatic approach, which has been great, as Lou's pointed out with the relaxation. They are promoting, you know, the HMOS. They didn't used to do this, but some of these concessions have been there forever. But they're now making it, you know, claim costs for washing uniform, claim repair, and things like that. So they are making it now online very easily for our employees to actually make those claims. I think predominantly because we've also had the consultations on tax advice and tax agents, that there have been people out there making claims on behalf of your employees because they know that those are there, but taking a significant cut of any saving. And the promotion of the government is to actually say, well, you can do this for free yourself.
Yeah, you have your personal tax account. No, it's all about kind of helping the individual get the maximum benefit out of this. These benefits don't exist to keep an industry going. They exist for the benefit of the individual. So, and with the use of the personal tax account, theoretically that should be very simple. I say theoretically because I got a letter the other day after 2 months of trying to say I had to fill out a P87 to get my home working allowance. So I'm not finding it quite so simple. Oh, and can we just, sorry, Natalie, before we just move on to the national minimum wage and national living wage, can we just finish off the kind of whole Christmas season or the festive season? Of course, bank holidays can interrupt on paydays. Paydays can come early instead of being on their contractual pay dates. And of course, HMRC are drawing attention once again in their recent employer bulletin to the fact that if you do pay early, that you still report your contractual pay date, your usual pay date, on your FPS, because for employees who are in receipt of universal credits, it can impact their claims if incorrect pay days are reported on the RTI submission.
Thank you, Sam.
Yes, it's a strange one, isn't it? Because you think employers are paying early to benefit the employee. They may actually ruin their Christmas because their universal credit benefits have totally stopped because they think they've had twice as much.
Yeah, no, indeed.
Okay, so moving, it's It's nearly 3 o'clock. I can't believe how this time flies during these sessions, but I need to move us along now to national minimum wage and national living wage updates. So, Simon, question for you. With the winter statement, the Chancellor announcing the changes to the national living wage, can you give us a bit more background and explain what these changes are specifically?
Well, yeah, so the government have accepted the Low Pay Commission's recommendations and actually have made a rise. There was a few hints a few months back that actually it may have been limited to 1.5% or thereabouts, but actually there is a 2.2% rise to national living wage. So from for pay period starting 1st of April 2021, and it is pay period starting, not in the middle of, so it's starting, the rate rises to £8.91. The other slight sting in the tail, if I want to call it that, is that the age for qualifying for national living wage has dropped from 25 to 23. So the former 21 to 24-year-old rate is now 21 to 23, and national living wage will apply from 23 onwards, if that makes sense. I should have said 21, 22, but so watch out. So there is a bit of a rise to be aware of, and what that implies. I guess the comment about furlough implications is we see lots of questions on social media asking that as national minimum wage applies, the furlough rates, why they've been based on February and things like that. And I think, just to be clear, furlough has got nothing to do with national living wage or national minimum wage, because they're not working. So national living wage, national minimum wage refer to when you are working or potentially training if you're on furlough. But if you're not, you could be paid a penny an hour. It wouldn't matter. It wouldn't be in breach of national minimum wage. So the rises that have occurred in April, or even the fact that furlough was extended, makes absolutely no difference in relation to national living wage, because furlough is judged on a reference salary, which is taken at a snapshot point, and usual hours, which unusually are not usual. So we might think the usual hours are contract hours. They aren't. They're a calculation of hours at the snapshot point and called usual hours. So it gets very strange, doesn't it? But just bear in mind that national minimum wage has nothing to do with furlough. But next year, 23, rates go up for pay reference periods starting 1st of April.
Yeah.
There's probably not a lot more to say on national living wage. That's the only reason I'm really excited about it is it's because it's about the only thing the government have announced that applies from April next year.
Yeah, I mean, what's interesting, of course, and what will impact professionals such as Lou and other colleagues who work in the payroll bureau, payroll services industry, is that an awful lot of people to recalculate to see whether or not they need to come out of the salary sacrifice schemes, because it's always useful to have that reminder that you might have an employee who is in receipts of a benefit in kind as a result of salary sacrifice, but salary sacrifice can't take pay below the relevant national living wage or national minimum wage rate for that individual. And obviously reducing the number of people who can qualify for the national living wage rate, which is the higher rate, to 23, which means potentially the number of employees that have to come out of the salary sacrifice scheme could increase. And we know that this is a process that every year agents as well as employers and payroll professionals across the UK have to do. But it's important that if you haven't been doing that, to keep an eye on that, particularly if you pay on or around the national minimum wage rates, just to make sure that you remain fully compliant.
That's triggered a reminder in my head, Sam, as well, because and Andy, just thinking about this, just a reminder, especially if those haven't furloughed before, you can't salary sacrifice the furlough payment that you claim from the government, because it's pre-sacrifice, post-sacrifice, I should say, get that the right way around. So you can't apply salary sacrifice to the furlough grant payment.
And I guess if salary sacrifice has stopped then you should start, and it's an employee contribution. That was what was being sacrificed to make it into an employer contribution. Then obviously an employee contribution, the normal setup should start. Or even a mix between salary sacrifice and normal contributions. Have to speak to what the scheme setup is, and of course remember to make sure you get the tax relief method right, because you were doing salary sacrifice beforehand.
Yeah.
Well, on the other angle is the employer might actually be on the hook for the enhanced employer contribution, because that's part of the contractual arrangement.
Indeed, yeah. The scheme rules might say it's all employer, no employee. Yeah.
Yeah. So it's not as straightforward as it at first seems. And I have heard it said that even though the minimum wage rates have gone up, because of is it the rate of inflation or something, the rates are that low in terms of increases that actually effectively the impact is nil. Is that right? Anyway, we're moving on to pensions and retirement. Shut up, Sam. Okay.
Yeah, shall I just go for it? In terms of, there's lots going on in the world of pensions, and it's good to have a little list of things there. Obviously, the bandings, AE thresholds, lower and upper thresholds, and even the trigger point, they're always under review by DWP every year. For the many years, they've been tracking, for the lower threshold and upper threshold, been tracking national insurance, lower earnings limit and upper earnings limit. And obviously, that has been, the government have announced what that might look like, but they haven't actually given any figures yet. So until we have the figures, DWP won't make a decision as to whether they'll change them and continue the alignment or do something themselves. They've got the right to do whatever lower and upper threshold they want. I'm guessing they probably will continue to align to the NI thresholds, and the trigger probably will remain as it is at 10,000 a year for the yearly paid people. Wait and see, really. As soon as we know, I know that we'll be passing information out, certainly to software providers, so that systems can be changed ready for April. In terms of tax reliefs, obviously there was a consultation or call for evidence to try and equalise the employees who do not pay tax but are on a net pay arrangement scheme and therefore weren't receiving any tax relief when they had their contributions deducted, unlike people on relief at source schemes. So I've not heard any feedback on the call for evidence. Maybe the people on the panel have, so we just got to wait to hear. I think as a general plea, please make sure you've got the right tax relief method used on your payroll, because if you haven't, it's a big thing to unpick. And also in tax relief, don't forget the government have often, the Treasury have often mentioned what they're going to do with higher rate taxpayers and should they have full tax relief. And that's always churning on in the background. There's yet nothing obviously to be said about that, but it's always a possibility. The pensions bill, lots of things going on there. And in fact, lots of things in terms of pension schemes themselves, like pension super funds, collective defined contribution schemes, and just general request from government, for instance, and also in legislation about how pension schemes invest their money, and therefore the pension should, you probably come across the terms ESG and environmental, social, governance.
Governmental.
Really, yeah. So because we're saying, and the government want to make sure that pension schemes are all safe in a way, that as in that what pension scheme, the money that we pay in or the employer pays in gets invested. Is that investment in a wise place? Will that investment, if it's in perhaps a non-good climatically area, not pretending very well, am I? then that investment could go down in value. Or normally there's a sponsoring employer, there's an employer that's connected to that pension scheme, or many employers. But if that employer isn't themselves thinking about the climate and what impact that has on their business, they themselves may become an employer that can't really continue to fund that pension scheme properly. So, and then they become an employer in distress, and that scheme has to consider what to do about that. So, as well as the scheme-specific stuff, the scheme has to be aware to make sure the investment strategy it has a long-term strategy as well, is wise and isn't going to suffer because of climate change, but also they need to think about if UK pension schemes invested in the green economy, that is a significant investment in that area, which can boost climate change impact. So the government's very pro schemes, which are, there's lots of money in pension schemes, so that can be invested wisely to benefit savers, but also to benefit the world in terms of climate change. I mentioned pension. Sorry,
Andy. The obligation to look at environmentally friendly investments first and foremost, or to look at the value of the pension scheme and then how to invest in environmentally friendly businesses. Which way around is it, or is it both?
Yes, it's the requirement is to make sure that the pension scheme members are protected, and therefore they have to make sure that they aren't investing in things which have a climate risk attached to them, and also that their employer.
And the obligation is to change it then, to change the investment if it is, or
that you will find if you just look, if employers look, or pension schemes, or anyone really looks at the pension news type thing, you'll see there's a lot of focus now. A lot of people say, no, we're taking £41 billion out of the scheme, we're putting it into climate friendly investments, etc., because they know that if you're investing in things which will suffer because of climate change, then that investment's going down, which means the savers will be impacted. So employers and employers who are paying contributions to the scheme, and quite a lot of large employers will have their own pension scheme, they'll be the sponsoring employer. If they're in an industry which perhaps could suffer from climate change, then they themselves as an employer will be looking at it, won't they? And the pension scheme wants to make sure their sponsoring employer is viable, because it's their scheme then, and the savers will suffer. But obviously the government also saying, why don't you invest in green initiatives, because that's the way forward for the country as well. It's a lot of stuff, and the pensions bill also includes things about dashboard, pensions dashboard, and that's very important, because that's going to give individuals, savers, an understanding what their pension schemes have, what schemes they have, and it will also identify where they've got lots of little small pots. Maybe they'll think about, oh, can I consolidate these? Maybe the dashboard could be used to do that. But there's even a working group looking at small pension pots, where people have got lots of small pots where the charges could be eating away those values significantly. Well, let's get them, perhaps is wise to move them into and consolidate them into 1 or 2 pots. Dashboard, a couple of years, at least 2-3 years before, is going to be really there for people to use, but a lot of work being done by the Money and Pension Service. There's a dashboard pensions dashboard program, and the data spec. In terms of impact on payroll, dashboard probably forces data cleansing. So the pension scheme will providing the data to the dashboard, but the pension scheme data comes from the payroll department mainly, HR as well, I guess, to some extent. But who's sending the joiner information? Who's sending the contribution data? If that data isn't clean and complete, etc., then I can see pension providers going back to the employers saying, we haven't got all the data, we haven't got everything we need to populate the pensions dashboard. They should have it anyway, and it's needed just for the administration of the scheme, but there could be a push to get that data sorted out. The fraud and scams, obviously, that is a big issue at the moment, and we're doing a lot of work with FCA to try and get the message out there. Please let your employees know to be careful. The pensions bill will put power to trustees to stop transfer. So when someone's in a defined benefit scheme and says, I want to take my money out of the scheme and invest it in this wonderful, brilliant, I'm going to make lots of money pension scheme in rubber trees in the Antarctic or something, then if they realise it's a scam, the trustees can stop it. So the employee won't have the right to move it if they know. At the moment, they can't stop it, and they think, oh, this is not right. So that's going to give them that power. What else? Retirement. Yes, looking forward to it. With grey hair, it should be soon. I don't know. Really, there's lots of things that you need to consider. Obviously, at 55, you can do pension withdrawals. I think the key here is seek advice. Speak to PensionWise, part of Money and Pension Service, and get advice from them. It's free. You should do it. Don't just go by yourself and do it. Take that advice. That's what I think. Any other thoughts?
And I noticed that the sanctions regime seems to be extended by the pensions bill as well. Is that there's some civil penalties up to £1 million that could be?
Yeah, TPR will have more power.
You've got more power.
To stop naughty people, and as you say, £1 million personal fines. It's because it has to be done. It's a deterrent. That's the purpose. The purpose is
prison sentences as well. Did I say up to 7 years?
We put a couple of people in prison as well already. Not that's the target.
Happy Christmas.
That one person was an accountant, ran his own business, was the trustee of the pension scheme. He took the money out of the scheme, bought a house for his daughter, that sort of stuff. And he's now in jail, and we're taking a confiscation order to get the money back, to put it back into the pension scheme. But you're right, there's areas where we want more powers to try and stop unscrupulous people taking people's money. It's not their money, it's the savers' money. So you're right, absolutely right, Kirsty, yeah. That's a lot of stuff. There's loads of, yeah. But in terms of impact on payroll, the one is the data, obviously the bandings, and the 2017 AE review, automatic enrollment review, where it talks about reducing the age from 22 to 18 and the lower threshold from the current level, the LEL, down to 0. That is at the moment still scheduled for 2024, 2025. But obviously there's a lot of news in the press about what about people who've got multiple part-time work and they never trigger? Yeah. How can they get a proper, adequate level of pension savings when if they had one job with all that money added together, it would give them, they'd be automatically enrolled and have a normal, good contribution level. And not only just for people employed, but also self-employed people who are not really contributing to pension schemes. So there's a lot of truth behind that. And so maybe DVP will consider bringing forward some of those changes before 2024. That's just a case of waiting and seeing, really. Yeah. Well, I think that might be it.
Well, we did have a poll for the audience specifically around this, the challenges that they think they're going to see with the process of the automatic enrolment in workplace pension saving. Let's pull that up, and then Andy, we can see what you think of the result. So I've just launched that now. We'll keep that open a little while for people to cast their votes. So yeah, please do submit your votes in there. So we're asking what are your challenges. You can answer increasing requests for existing pension schemes, increasing numbers of opt-out, cash flow preventing prompt payment, the increasing number of requests to transfer funds due to scams, and trustee concerns about pension fund distress. Do
you want me to say a few things about those points?
Yeah, let's see what. Yeah.
So, interesting. I mean, yes. I mean, if people are suffering financial problems individually, then I can see that they might want to exit the pension scheme or possibly reduce their contributions to a lower amount. If you've been automatically enrolled, you might want to opt out because you feel that you can't afford a contribution. If you can, please do that, because you're going to miss out on the tax relief from the employer contribution. But obviously, you do need, if money is the most important thing, then perhaps just reduce the contribution down. But it's a personal choice, understand that. And perhaps when you come back to work, and ideally, then, and you're still in employment, then maybe they need contributions upwards. I might have to guess which one it was, because I can't see which one the options are now. Yeah, I think
you can guess. Nice.
One.
You can't show me, can you? Because you've got the results. I'm going to pick the fourth one down. I don't know what that one is. That's all we've got. The fourth one down.
Here we go. Are you ready? There we go.
Wow.
Oh, no, that's not right.
Yeah.
Oh dear. That's
How
not good.
interesting,
That's not good news. DWP are not going to like that.
No. Please, please encourage people to, in effect, come back, opt back in again afterwards. If they return to work full time and get paid full pay, etc., then get them to come back in again. No.
Is the challenge often, Andy, that the number 1 that came up may actually be as a result of number 4?
Yeah.
To the extent that why are people actually requesting fund transfers?
Yeah, yeah, and I think sometimes people want the money out of the pension scheme to live on, and that's why they're asking for the money to be transferred out. Seek advice.
Yes.
Remember, seek advice.
Yeah.
Very good.
Ooh.
Okay, I think we're going to move swiftly to Brexit, something that we've not really talked about recently because furloughs made the headlines, but something we wanted to include in today's session. We have a poll for everybody to take part in, so let me just access it.
Yeah, when we next meet, we won't be European.
Well, we're not Europeans now, are we? On that, but
Well, we're
the transition will have.
We're transitioning. So, I know we're out of Europe now, but technically we're still European because we're in the transition phase.
Well,
So,
sure.
I can think of some analogies that probably aren't politically correct, but you know, it sort of, when we next meet, we will know whether they have managed to agree anything or not.
Apologies, I can't bring up the poll. I think we've sort of maxed out how many we've got, and today we've got another one on off-payroll work that is also included. So sorry about that, everybody. But let's go into this slide then to talk about employment rights, social security, the right to work, and migrant workers. So obviously with us leaving Europe very, very soon, what are the implications for employers to consider with the existing and the future workforce? I'm going to ask Kirsty to answer first.
No problem, Natalie. So obviously EU law was applying until the end of the transition period, which is the 31st of December, so in a few weeks now. And at that point, the UK law, the EU laws transfer to UK law under the withdrawal bill. And then we are off and running, so to speak. And we will still be bound to interpret any EU decisions that are existing on EU case law on the basis of how that's run in the EU, unless our higher courts decide to depart from it. So the Supreme Court has got a power to depart from it, and that's recently been extended to the Court of Appeal and the Court of Session, but all the other courts, the High Courts and the County Courts and the Employment Appeal Tribunal, are still bound by any existing EU decisions, but not by anything that's new. And then we may see a period of deregulation of the laws that have come in through the withdrawal bill. And the ones that people are looking at specifically are things like discrimination law, because the Equality Act implemented EU law. It's very unlikely the Equality Act will be repealed. It would be extremely controversial. But what they may do is look at things like the fact that there's no cap on discrimination awards in the Employment Tribunal, and they may seek to put a cap on that. And they may also look at things like parental leave and family related leave, because some of those rights derive from the EU, although in fact our UK maternity leave based on the EU legislation is more favourable than the requirements under the directive. So I don't think that that will change massively, but I think we will see areas like the level of damages coming down. Transfer of undertakings, that can attract a lot of negative press, but the principle that employees in a transferred business should transfer has been very useful for businesses, although it's problematic because everyone knows where they stand. Before that came in, there was so much case law on it, and everybody, was almost allergic to it, that it was very confusing. But what might change is things like that. Currently you cannot harmonise terms and conditions as a result of a TUPE transfer. That may be watered down in any changes that arise. Working time, that is another area that's under the spotlight. The right to statutory holiday pay is now well established. It'd be deeply unpopular if it was removed, but it is quite wide in terms of some of the decisions about accruing holiday whilst on sick pay, and holiday can be carried forward. Those kinds of things could be reviewed and watered down around the edges. So I think we'll still have holiday pay, but it may change in relation to that. And also how holiday pay is calculated. We've still got a few years to run on that. Every single update I've done for the last 6 years has been on holiday pay and how it's calculated and what you're entitled to. So I'm sure we won't lose that joy. Agency workers, that has been extremely, it's been the topic of a lot of confusion and controversy. So I think those regulations will be reviewed. They're deeply unpopular with businesses, and they haven't really become embedded in a way that makes them politically difficult to remove. So I think they will be reviewed. And then, of course, we've got freedom of movement and immigration and rights to work. They will all obviously substantially change and already are changing. Do you want me to talk about that a little bit? Or does anybody want to say anything about those changes I'm suggesting might arise?
Well, with rights to work, I'm of the view, Kirsty, that nothing changes until June. But there are implications with migrant worker recruitment. Is that where you were going? Yes.
Yeah, I think we've got to make sure that everybody's got their applications in by June, and if they don't, then they're going to have a problem in relation to their settled status or not. But it remains to be seen whether people have got their house in order or appreciated that these deadlines are now upon us, because they seemed very far in the future, and then everyone forgot about Brexit and dealt with COVID, and now Brexit's coming, and really there is a need to look at the schemes. I mean, the purpose of the transition period was to avoid a cliff edge scenario in the hope that people would do that, but I'm not sure how far along they are. The evidence I've heard about in terms of businesses applying for tier 2 licenses, for example, has not been as big as it should be, given the number of workers that we've got who would fall into that category. So I think it is definitely something people ought to be looking at very carefully, because if people haven't made the applications and they then are here after the 30th of June, they will become illegal immigrants and they will be subject to removal from the UK, and then it will be very difficult to get back in. So I think that's definitely something people need to be very mindful of at the moment. Yeah.
I think, there's the one, if I had a wish list of what I would like to see potentially change with working time and holiday pay, is I would like to see the UK government reconsider the subject of rolled up holiday pay. Yeah. Because I think in certain
payroll,
in fact, in quite a lot of situations, that is a very useful tool to be able to use when it comes to holiday pay and dealing with holiday pay. And I think it certainly simplified the processes for a lot of employers, and not being allowed to have it because of EU kind of outcomes, I think is causes a problem. So that's, if I had a wish list, that would be at the top of it. So
I've certainly had that from a lot of clients, Sam. I would agree with you. It's difficult in circumstances where people have teachers, for example. That is a difficult area when they're not working for periods like that.
Yeah. Well, yeah, the interpretation, application, the guidance is very woolly, is reality. And I think we had a meeting a few months back with various people, Sam. I'd actually say that the guidance only says it's guidance. they're obviously basing it on an interpretation of law, but they don't seem confident in their interpretation in the way they express it, because they then tell you to get your own legal advice. I'd actually say most employers, I dare say that, probably don't comply with the latest guidance from BEIS. They probably find it, and actually, if as a sort of a mathematician or a payroll expert in that sort of element, or an IT expert, quite often I don't actually know how you would calculate it, because you'd need to be Doctor Who travelling in a bit, and that is quite a challenge. However, some try, but I think some don't. But it would be good to actually have a solid base of what is it.
Yeah, no, I agree, especially when we look ahead in our kind of time bubble to when a single enforcement body is around and exists, and if state enforcement of holiday pay or holiday entitlement comes to fruition, as was proposed in the consultation last year, then I think having a very clear, transparent, simple process that everybody understands is essential, because otherwise we'll just end up in a similar situation as we've got with national minimum wage, with employers being named, even though on the face of it their processes and policies are fair and reasonable, but then they might not necessarily comply to the letter of the law. So I think it's one of those subjects that really needs clarification before we do go down that route of state enforcement.
You need to move us on, Natalie. I think we're going to
running out of time.
stay on forever on some of it.
We have 4 minutes to condense the knowledge and information and updates on off-payroll workers, because I know this was a topic that everybody wanted us to include in the agenda today. So we're going to skip the poll, sorry, but we want to make sure that you guys get the most information from this. So I'm going to firstly ask Lou, what are the implications of off-payroll workers? What do businesses need to do? Is this a payroll problem?
I think it's important to remember that IR35 has been around for almost 20 years. This isn't something new, but it means that in 2021, there is going to be significant changes that employers have to comply with and have to be ready and have to be prepared for. In effect, it should have happened from April 20, but because of COVID, it was postponed for a year. But really and truthfully, employers should already be looking at this. Do I think it's solely for a payroll person, the payroll department to be responsible for? No, I don't. I think this is a business situation that they have to look at the whole process from a business point of view, because there's so many aspects of it that have to be considered. For a start, a business would have to determine, does somebody have employment status? So you're looking at HMRC and the CESS tool that has been up until April 20. HMRC had been working very hard to make improvements to that, because I'm sure if anybody had tried the CESS tool like I had, it always came back to the same answer. Which was, yes, they are employees, regardless. So then you were having your conversations with the contractors or with the people involved. It also affects the business from the finance point of view, because after all, they would be looking at the invoices. You're looking at the HR, because they're aware of the people possibly that might need to be considered depending on the type of your business. I'm thinking more of people who run gyms and the local governments who would have responsibilities for gymnasiums and how they would work in employing people. You have to establish the current workers and the services they're providing. You have to look at those. You're looking at your balance sheet to see what your figures are. You're having to assess the likelihood of whether you need to have these contractors' national insurance numbers and gathering that information. You're also then looking, obviously, just by that quick synopsis I've given, designing new processes and controls which help maintain and ensure that everything that comes through the business is being run through this process, to establish whether these are employees or not. You then have to remember to train your employees to be able to run this system. And as you can see, this is a huge project. This isn't something that you can wake up on the 1st of March 2021 and think, I'm going to do my CEST today. This has a lot of planning, a lot of consultation, and also communicating the change, not only internally to the business, but you're having to reach out to those contractors and those businesses that might be actually employees, because from employers, you look at the additional money that you've had to spend and that you might have to project to spend as well.
Yes,
Thanks.
indeed. And I think if I could just add at this point, the scale of the problem is going to vary enormously depending on the organisation, but the organisation as a first point, and we made this point at the last meeting, last panel discussion, was finding out exactly who we're paying, what businesses are we paying and what are we paying them for. And that won't be through payroll, that will be through finance or some other department, but having that approach, that whole team approach that looks at every single payment that's made for personal services, whether that be through a company or not, but certainly if it is through an intermediary, then that's a starting point to establish exactly how big this scale of is going to be, you know, or what the scale is going to be for your organisation. I think maybe next time we need to start with this discussion.
Yeah, let's do that.
Well, let's do one on this.
Uh,
Session on payroll.
January then.
Yeah, we could. Yeah.
We will have to pass. We don't have time. We've answered questions during the session. If anyone has any more, please do send them through to me and I can direct them to our experts. But all I can say now, it's gone 3:30. So thank you very much for all our great attendees for joining us, but also thank you to our speakers, our panel. You've been doing this every month since March and helping everybody through the minefield of furlough and everything else that goes with it. So thank you very much. And we look forward to welcome everyone back in January. So we will open up registrations next week so secure your place for the 15th of January. But that's it for us today. So thank you, everybody. Thanks.
Thank you.
Thank you. Bye, everyone.
Bye.
Merry Christmas. Bye.
Merry Christmas.